Nice rally here right at the highs for the day, but we've got a global rally going on. Let me just show you what's going on. Some very good earnings over in Europe today. So Germany's up. In fact, Germany's been a lot more stable. It's moving off the lows for the last 3 or 4 days. Japan has been more stable. Shanghai looks like it's trying to bottom a little bit here. We had weak PMI numbers, economic numbers over in China. That doesn't seem to blunt the rally today. Whether that's going to be enough, those weak numbers to make China cry uncle in the trade war dispute, it's not clear. But today, at least, the market over there is up. We had great earnings, not just here in the United States, but over in Europe. A number of big companies reported. They're all moving up. L'Oreal had great numbers. Sanofi had great numbers. Telefonica, Banco Santander had good numbers. All these stocks up 2, 3, 4, 5%. They're helping move Europe forward. Here in the United States, FANG's all up here. Facebook, and the shorthand is what's good enough. Amazon, Netflix. Remember, these companies are not all the same. Obviously, we're waiting for Apple. Apple's up, what, 29% this year? Something like that? Facebook is down. So a lot riding on Apple. The risk is to the downside for Apple right now. That'll be the key stock for this week. In sectors, communication services, that's because, of course, you've got Google in that group. That's doing a little bit better. Tech's doing okay. I would like to see industrials a little stronger since that was hit so badly, but let's call it fair. And of course, defensive consumer staple stocks selling off a little bit after a strong showing overall. Watch the market laggards. 4 ETFs that I think are very important, badly beaten up this month. Home builders, semiconductors, oil service stocks, energy's been horrible, and metals and mining, another group. These are modest bounces today, not particularly outperformed, particularly on energy and metals there, not outperforming the market. It's a little bit concerning there. Home builders doing a little bit better, so let's just say 2 out of 4 isn't bad. How about November? Get us into November, please. Any chances? And there are a lot of good signs here. We've got potential for pension fund rebalancing. Remember, stocks down so dramatically, pension funds have to be evenly balanced in certain ways. I think you'll see some buying there. We've got extremely oversold conditions, the sectors I was talking about there. Buyback activity is going to rise. I'll show you that in a minute. And we've, of course, got strong seasonal flow. During a midterm year, S&P has been higher every midterm election since World War II in the 4th quarter here. Meantime, want a trade that's interesting? How about the big Amazon versus retail trade? Remember that big trade, go long Amazon, sell bricks and mortars? You know it's becoming unwound. Ever since the Amazon earnings report, Amazon's down 14%. Look at this, Macy's, Nordstrom, Gap, they're all up. That's the big trade unwinding. There's a very interesting trade that we're seeing here. The important thing right now, retail's doing better. Buybacks, I mentioned you're going to see more of them. Look what we've seen in the last few days. Lots of buybacks have been announced. Deutsche Bank just out with a comment. Buybacks have been the main driver of the equity rally in this cycle. In the absence of outflows and further positioning cuts, buybacks should drive equities higher. And if you look at it, in the last few days, Intercontinental Exchange, Estee Lauder, Akamai, IBM, Maxim, Jim Cramer, we're starting to see some buybacks come back into the market, and hopefully that will have a positive effect. Jim, back to you.